Hello, testing 1 2, testing 1 2.
Greatest serum, advanced night repair.
Just give me a second here. Testing my other side. Testing 1 2, testing 1 2. Okay, we're up. Right. Cool. All righty. Okay, we're all good. All right, so it is 6:56. Today is October 29th. And okay, so we are now live on YouTube. Thank you for attending or whoever's watching. 3 people, awesome. All right, I'm going to get my screen shared in a minute. Give me a second here. Should be available now. Just waiting on my other end of YouTube. Waiting for it before I start to make sure it's all good. Welcome, welcome, welcome. Okay, here we go. Right on, right on. All right. Okay, let's get this party started. Today is October 29th. Brian here from quantlabs.net. You are looking at the current dashboard of my analytics service. This has been added last week. We have been working for a good couple of weeks with crypto. Been working as of last Thursday with both CFD and Forex analysis. The two are important because this is data from Oanda, the Forex broker, which originally started here locally in Toronto. Okay, so tonight the idea is if you got any questions, you can do a chat. I got my chat mode. There was a super chat. I don't do super chats. If you got a question, always jump on in and ask away. So tonight I'm going to be comparing the performance of cryptocurrency, CFDs, and Forex. And as you know, markets are not looking good with this trade war brewing. I've not even had the chance yet to look at the markets to see how we're doing. From today's session. So everything's looking down, 0.66 down 0.99, down 1.63, down 4.44, and so on and so forth. Any upswings? So gold is up 0.35, silver's up 0.33, 10-year bond is up 0.32, and of course our friend VIX 24 2.24. So those are the important ones. That's what they want you to believe, folks. So what we're going to do now is we're going to switch on over back to the analytics. As I said, we're going to look at which are the top performers are for the last week or so, namely in the last few days. What am I doing here? There we go. Okay, great. So any requests first? We'll go in the order if anybody's got any requests. If not, I will start with, let's say, cryptocurrency. Cryptocurrency has not been doing too hot for the last, I'll even say a week. If you're not familiar with this dashboard, again, this is on the analytics. It's part of the analytics service that I've got running. So here's what we're looking at. I track in crypto probably the top 47 pairs, the highest volume. I'm not going to get into it. I just say, you know what, I'm going to focus on the top movers. So when I sort it out by top performers, we are referring to things like WAN BTC, WAN Ethereum, Ethereum BTC, and look at the moves here. So these are minuscule moves. 3% for crypto is very small. But if we were able to short then BTC, we'd be doing pretty good, down 46%. That's pretty serious move down. Now, this data comes from crypto, the Binance exchange out of, is it China? Is it Taiwan? Is it Malta? Well, whatever, it's out of Binance. Largest exchange in the world. And when you look at these numbers, 3% over the last 3 hours, that's not a big move. This is not encouraging. I can also show you, we've got the system running. Let me just go to the appropriate directory. So we've got our various script's running. Let me just make sure. I want to do a couple things I'm going to show you. Oops. Okay, so we're using Python, obviously. Let me just go into my Binance directory here and show you what we got. Okay, so first thing I'm going to show you is the risk, the weighted average of the risk of the top 5 largest crypto pairs out there on against US dollar. So I'm going to do the risk. And what we do, it goes out, does all the usual. It's coming up with bugs. But the average weighted here, it's not a big move. Ethereum Classic's negative. Litecoin's barely above 0. So it's fairly weak. And again, when you look at further down here, these are the negative movers that are fairly volatile. I would call it high risk to take on. So the only one that's been performing A-okay over the last couple of days, or week, I should say, when I look at my P&L, the system makes attempts to put on positions, but you'll notice here there's a whack load of them since here, which goes up to 72, which has been just 0 movers. Try to take on a position. I've talked about these. So we're going back to the 19th of October. There's been literally no moves. So on the 25th and the 24th, the only ones that qualify for my system is WAN Ethereum. It also tried to put on some trades a week ago with Nano. That's all that's coming up. Those are weak numbers, weak potential. Meanwhile, when we look at the higher volume, SC Coin here is the dominant player. XRP, BTC, and ADA are the top 3 highest volume players out there in cryptocurrency land. And when you ask me on the negative list that I have talked about, you'll see here that WAN has been just declining a little too much. I mean, that's over 12 hours ago. But this is the last track of when there was like these volatile down moves. And the only ones that qualify are WAN. And that's all there is. And that's all there has been that qualify as a trade to put on in the world of crypto. Really surprising. The volume of crypto's down. The volume of Bitcoin's down. Has been hit today, among other ones as well. So crypto is not the best space right now, okay? So as that may surprise people, that's how it is. So then we have our next set of 2 choices to diversify our selection of asset classes. Just join us. Thanks for the like. You can always ask away in the top chat or the chat. Hopefully you can see it on the right. You can say hi. We've been having a couple of hires out there or people that say hi and whatever. If you want to participate in questions or feedback, go ahead and obviously I'll respond. So I've just shown you cryptocurrency. It's not a good asset class right now. So as I said, I just launched this last week, the CFDs. These are like the poor man's way into the world of derivative. And this is data now from Oanda. Oanda is pretty well, comparatively even to Interactive Brokers, Oanda is the biggest player out there. As far as I'm concerned, over even Interactive Brokers. So Oanda is big, okay, from a data perspective. So here's our fast movers in the world of CFD. These are defensive plays that showed you with just pretty well everything bleeding out there in the markets today. Last week, everything was down and bleeding as well. So when you look at these numbers, everything's gone defensive. The first one to talk about, which used to be Thursday, Friday was very solid, was China top 60, or sorry, top 50. It was right up here. Last week, sugar was up there as well. The only consistent one that is up there at 2% moves over the last 2 hour or 1 hour and 3 hours is UK 10-year bond. That's a classic defensive play. And then with the only other positive one is this XAU, XAG, which is basically a ratio index between gold and silver. And that's what that is. That's positive. That's all there is. So again, as I've said before, and sugar's up there too. I don't see it. I don't know why. Down here. Yeah, sugar's up there as well. So 2%. So those are your top three movers. Down here we have a 10-year bond. That's minuscule of a movement. Same here on the 30-year, 10-year bond, treasury. Same with the 30. And is that US BO? Oh, that's Brent oil. So these are very small moves. And from a capital perspective, you want to focus on, let's say, the top two right here. Got a question from Fabio. Where do you source the data for FX? As I said earlier, Fabio, this data is coming from Awanda. Okay, these are CFDs on Awanda. This is non-interactive brokers, so it's Awanda. And I've done the comparison. Awanda is bigger than interactive brokers. Trustworthy, don't know, but this is where the data comes from. So as I said, we want to focus usually on maybe the one to top three performers. And clearly here, see, I'll repeat. Last week, sugar was doing really well. It was up 8% moves on Friday. Yeah, okay, so you see the same ticker names. Yeah. So these are the top three you'd probably want to put as defensive plays. Sugar, UK 10-year bond, and this ratio between silver and gold. Okay, that's all there is. And these are better performers than crypto. As I said, the only one out there was WAN against Ethereum and WAN against Bitcoin. Right now, I'm still trying to watch for the negative movers with the more potential. It's still fairly new. So these are problems. The other thing that we can always look for is I have an overall perspective of the overall markets. Here I've got them all listed on what's available as CFDs in the world of Awanda. Historically, if I was to sort by one of two ways, momentum, the strongest players naturally would be NASDAQ, Germany 30, Japan, SPX. This one I'm surprised with India as well. These are the strongest performers out there, indices as CFDs. So those are the overall. Now I can pull up the reports, but I'm just giving you a very broad view of everything that I can track. So by volume, you can clearly see that NASDAQ and the US top 30 as a CFD on Awanda, and we'll call it Germany as well, top 30 for Germany, are the big movers. Then we get this ratio here, classic defensive play, and then we're getting into the Russell 2000, and again, the other ratio. So this is gold. This is the gold, silver versus, gold versus silver ratio. I'll have to get a better name for that. But those are the top movers by volume. I can also go through the reports if you want. But right now, those are your top movers, 3 and 2% currently in the last hour or so. So that's all fine and good. And this is what really surprised me. Now, we're going to pretend to live in a world of no leverage. Go back to the dashboard. Now pull up all the same stuff I've shown you, but for Forex. This was what really shocked me. And you guys can confirm or deny this in your theories here. Let me just pull up the Forex here. Okay, so it's going to pull up the Forex systematically generated stuff. Okay, so here we are. Going to pull up the faster movers here. All I care, I'm going to be honest, the only ones I really care about are the top performers. I don't care about the shorting opportunities. Right now, let's focus on the long. This is an interesting one. Top performer right now is the Turkish lira against the Japanese lira, the US dollar against the South African rand, the Swiss franc against the rand, US against the Hungarian, Europe against the rand, South African rand, and now the US dollar against the Polish zloty, and the pound against the rand. These are our top performers. So we have two performers that are better, are doing 3, and we have 1, 2, 3, 4, 5 that are at 2. And that's without leverage. That's pretty good when you compare against CFDs and crypto. So if you just joined us, there's only really one maybe adequate player candidate for any kind of capital in the world of crypto. But when you compare here, out of all the asset classes, just again, without leverage, I will tell you that Forex right now is the best asset class to put money into. I don't know if it's a defensive play, but there's a lot of volatility in the market. So out of this lot, which one would you go with? I don't know, but obviously I'd be focusing on the Turkish lira and the US against the yen, and the US dollar against the South African rand. That's if you ask me. And again, we can look at the matrix here as well, but right here is an interesting one by volume. But I'm not sure if this is updated, but over the last tracking I've seen, this has always been the top player, was US dollar against the lira. So if you have any questions or comments, thanks, Fabio. If you got any questions right now, before I go into the reports, I can go pretty deep. This is just the overall higher level, where to put your money at this present time. Now, I'm not recommending it because we have to factor in volatility, and volatility that moves against you fairly quick in your positions. It's still a high risk maneuver, but from what I've seen, always the opportunities in the world of crypto is always intraday. Now, you can tell here the top movers are based on hourly intraday. Okay, so it depends on your view if you're wanting to buy and hold overnight, or if you're an intraday trader. This is probably the better ways to track. So let me pull up some reports here. I've shown this last week, how this works. So I'm just going to email myself the latest Forex reports, and they're pretty deep. So I'm going to pull up the link, pull up the reports, download all the fun stuff. Okay. So we want this one. So I'm going to unzip it or extract it. So many of these choices here. Let me just pull up the right software here. Let's do that one. Okay, here we are. Okay, so I've shown this again before. It's the same reports as you may or may not have seen. This is where the detail lives, okay? So here we got various reports. And again, because we can be on Awanda, we have shorting opportunities here. Of course, these can be nice plays as well on the shorting side. Fabio says, didn't leverage that into trading API, study programming, etc. I started using Slackware some years ago. That's good to know. I always tell people you may want to, I do everything that generates these charts, everything that generates the data is Python, fairly easy. I got courses on that to show you how to get started. So we have those tools available for you. And here. Oh, yeah, you're using US Unix and BSDs. I don't want to get into technical mumbo jumbo. This is purely trading tonight. But if you can do BSDs, something I'd go with. But for now, I just want to focus on trading. All right. So again, we've got our reports. Again, we can short So let me show you the potentials of the short. Now, I can always determine how big these reports are based upon the size of these reports. So this one's is not a big monster, but it's big. So let me pull it up. Now I only use LibreOffice. I don't use Excel or any of the Office product. Yeah, just give me a second here. Okay. So I've shown this before. Yep, I'm at University of Physics helping the guys in Python as well. Yeah, Python's a good language. That's why I use it. It's easy to understand. So here are shorts. We have the Rand against Japanese yen, Euro against the Canadian, New Zealand against US dollar. So when you look at these charts, now I can show you overall what goes on here, but when you see this level of volatility and these buy and sell signals and how fast they are, to me, this is not very predictable, but this is our latest one, is the sell signal. This may be possible. This may be valid as a short. And I only say that because we have a downtrend and the pricing action is going below trend. So when you're either above trend on the long, that's a good indicator of a potential profitable opportunity, and a profitable on a short when it's below the trend historically. So we have that. Here we have the Fibonacci's, but you can clearly see historically that there's not a lot of movement here in terms of breakout opportunities. So it will be a short, but historically it's not going to move much. So you ask yourself, is it worth trading? And also the volatility is not on your side. The distribution is helpful too. These are daily returns. You're probably looking at slightly more positive daily returns than negative. So historically, that's going to work against you if you were to potentially short this. Here it's quite interesting. We have a downtrend. All this soup is available at your site. Yes, it is, Fabio. Everything that I'm showing you is available through the charts. So here, this chart's really good because you can compare the different periods. This is what professionals use, these parameters for simple moving average 50, simple moving average 20 for the short, for the slow and fast moving, and then the really slow moving, the exponential 200. So when everything's historically below the long-term EMA, you know you don't want to long this. This is a shorting opportunity, but I don't know. And I'm a big believer of RSI and momentum. You can clearly see that the momentum's dropping off right here, but it's still at zero. You got to see that drop below zero to go, yeah, I'm all in. And this is sorted by potential as a short. So this is not looking good, but there was some slight moves here on these bars. You can clearly see we've been losing over the last 3 days. So it is correct. And as you can see here, this is a 30-day look back. Goes all the way back to the 25th, 22nd of October. And there was some opportunity there, but we didn't catch it in time. My system also has the ability to track candles. I got to fix it. It can also track harmonics. Tracks also automated head and shoulder. When you start seeing signals that in these charts, that tells you something's definitely going on. And especially when you start to see candles like Marabuzu, I can never say that, Marabuzu, that is a good indicator. When you start to see certain types of harmonics in the direction, if it's bearish, then you can, with conviction, say there is a shorting. I think we're a little late in it, but hey, now we got the New Zealand. We have the same thing, but it's a sharper drop, right? So again, it's below trend. This is an opportunity, but historically, it's reaching its low point. It might be able to come down historically a little farther, but I wouldn't count on it. Again, it's below value, and you can confirm that. It's on the Fibonacci's. Again, this mix of positive versus negative daily moves, that's a mixed bag. And again, we have a classic downtrend, which is fine, but from 74 historically, all the way back in April down to here, I think the opportunity's come and gone as well. True that too. And again, it will come back. You can see the losses and the profit. It's gonna turn against you. I wouldn't even touch any of these shorts. Okay, and again, last 3 days of shorts, I wouldn't touch it. That's what these charts are telling me. So again, I can go through the Euro Canadian. I'm not going to bother. I just don't like these shorts, to be honest. One thing I should let you know, I can give you detail on the Excel spreadsheet. I don't know, as an example that really matters is the slope is a good one. Also, we have here volume's a good measurement, but let me just find it here. Positive and daily moves. Okay, we have our standard deviation. So we can compare our volatility against other pairs if we wanted to do that. Yeah, I mean, there's a lot of things in this chart that it can tell you. So I could also sort this. Let's say if we're going to do longs, yeah, here I can sort by buying signals in this spreadsheet here. So we are sorting by. Let me just get the column number here. So we're sorting by longing. Okay, so we're sorting by column E. Okay, data sort E ascending. Okay, so we have some. So we do have some. Oh no, I'm sorry. Yeah, no. Yeah, it doesn't look like there's any buy signals here, like buy signals with us, as I said, conviction. Doesn't look like it. So putting it back to normal, the only ones I can always compare, as I said, the volume as well on this. What's our column? Volume is column I. So that would be this guy. So, okay, we'll just go to the bottom here. So one's hitting the most volume. Again, are these, again, this is always the Turkish lira or the more volatile rand right here. This one's an interesting one with the euro and the Norwegian krona as well. So theoretically, you always hear about the big six with the US dollar, euro, Japanese yen, franc, the Canadian dollar. But they're not talking about the fast movers and the ones that are getting the volume. So these are interesting things that nobody seems to talk about in terms of the movers. Any questions or comments so far? I'm keeping up with Fabio here. Anybody else got any questions or so? So right now, if you ask me what would be the best place to put capital, depending upon your risk tolerance, I'd be putting my money on these three right here, on the movers right now, and develop a strategy that will help against volatility, because these are very volatile movers. And I can tell, let me pull up one of the reports. Yeah, as Fabio says, I've been trading WTI, but here's the interesting thing, Fabio, is if I showed you the CFDs, the movers, let's do the 3-hour mover, and did so you're trading the WTI, okay? You see, it's not a top. So the question is, you're kind of trading for pennies. I don't even see where the WTI is. This one right here. So it's only in the middle of the pack and it's losing. So again, if I was deploying capital, I'd be putting money into these guys right here, sugar, UK bond, and that's pretty well it. If you were to trade equivalent of CFD, that's my opinion, because these two are moving. So, but the top performers right now is Forex without leverage. And that's where things seem to be. I mean, you got Turkish and Japan at a 4% move over 3 hours. There's nothing that we've looked at that is higher than 3, but this is a 3-hour move with a 4% move. Again, without leverage, it's pretty good. Everyone talks about spread, but when you look at the volume again here, I don't think nobody's worrying about spread or the cost of spread, because they're the highest volume right now. The top two is US against the Turkish lira and the euro against the Turkish lira. Okay, so you got some of the good moves on the US Turkish lira. That's good. I mean, I can tell you the volatility of it. Well, let me pull up some reports. So let's say I'm going to look at FX based upon volume. Okay, let's see what my system said. Still slow. Well, it depends on your time horizon, what you're willing to hold. This is a fairly big file. Okay, so these are the longs. This sorts on potential. So right here is, okay. So here's the volume. That's the volume it needs to hit over a day. So it does filter out the smaller players. Here's the group mean for volume. But this is the interesting one, is the volatility, 0.008. So let me check on the euro Turkish, this guy. Yeah, let's try this guy right here. The US dollar and the so it's 0.008 for the group. So the volatility is clearly higher than the group. So that tells you the group volatility was 0.008, and this guy, this US Turkish lira, is 1.1% versus 0.008%. So this has got more volume. So you got to have a strategy. If you're going to automate this strategy, you got to be able to find ways to, if you're going to put on that trade or the position, you got to find ways to ensure that there's no fast down movements. And this is very similar to crypto. Once you find that, you can implement this and watch these top movers. And again, those were anything with the lira. So right here. So we're dealing with, again, but in this case right now, the Turkish against the yen, but the report is saying it's US dollar against the lira. So let's check out some of the reports here. And you can see right here, that's a big move. That's a pretty nice move. And that was, I can probably capture the dates. Look at that. That's a huge move over the trend. It's coming off though. The question is, will it come back? Who knows? If it does, the only way to verify that, among others, is again, harmonics, candles, head and shoulders. I think this is a late trade opportunity. Because why? Because it's already come off. Unless if you look at the calendar to see if there's anything that will impact this trade. I think the reason this trade happened is a political one. When Turkey released that pastor and improved the relations with the US, that relationship popped, and you're seeing that right here, if that makes sense. So you can clearly see here on the Fibonacci level, it was overpriced, overvalued. On the Fibonacci here on the 0.236 level, and it's coming back. But it's starting to show signs of may take off again. The one way to definitely verify that is you can see historically in the last few months, clearly you see that this pair has been hit pretty hard. But interesting enough, just in the last however long, you see some big moves with this pair. So here's another sign. You can just clearly see that the volumes has gone up. But here's the difficult part. We've got a nice 4 or 5 days of green, and then it comes off. These volatile moves are pretty high risk to take on. And here you got some two movers again. But clearly right here was the place to be. Okay. And you know how I know that? Just right here, that RSI starts to take off. And that's when you know. And you can also verify that through, obviously, the momentum. There's a direct relationship there, and it does not lag. That's why I like these indicators. Moving averages lag, but you can clearly see what went on. Is that now this move here was in August, and it's gone flat. So, and look at these big negative volume moves. I can get more recent charts right here. Just kind of, this is in the last, again, 30 days, a couple of moves up, boom, 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 moved up, and now it goes flat again. So who knows what's going on? But would I take it on? I don't know. It's one of those risky things, especially when you look at the volatility because it's too high. But what you could do, because I'm just thinking of this now, look at this long list you have, okay, to choose from. So if I was to look for volatility where the volatility was less than the group volatility of 0.008, that's what I want. So we have here US dollar and the check. This potential right here, it's a slow mover, but it's above trend. Potentially. And historically, it's kind of moved a little bit, looking not bad. And again, here, when you look at the Fibonacci, it's fairly tight, but it's just in that what they call the golden zone here. So that's a buying opportunity. And not just us are going to be looking at this, maybe other people too. Now, this is again on a long-term basis, but you can clearly see evenly distributed on the negative versus positive moves. But here, look, it's reaching some form of high. So let me just go back into the chart here. And this pairs the USD CSZK. Let's see what's going on here right now. USD CZK. So it's moving at 1%. Not bad. So it's not bad. The technical's looking okay. It's moving up. The RSI, it's above 0 on the momentum. Ooh, right here. This is good. This is good right here. See, this is approaching 70. That means buyers are piling in. And this is what happens when buyers pile in. Boom. Nice up moves here. And they lay off. Everything comes in threes. Don't ask me why. Typically, chances are everything's in threes. So got 1, 2, 3 moves up. These can be sometimes whale traders as well. Whale traders test the market, shake out the followers. Second time in, whale trader comes in, partially moves it up, shake out the movers, goes in on the third time, boom, and it pops a little bit. You can clearly see. And here's that big move right here. And you can probably see it here. Historically, got 1, 2, 3. That's the next third big move, potentially. Doesn't always happen that way, but it wasn't as successful because you can clearly see that the 70 RSIs, it has potential to move up. That's why I like the candles and I like the harmonics when they work. But you can clearly see we got some nice big moves here. And that was 2 days ago. I can verify that right here. So we got, yeah, a decent move up, and it's continuing to move up. But it's tapering off and it may come back down. And the momentum's still positive. The RSI is just maybe obviously either peaking or coming off. But that's a nice opportunity. And that's probably out of all the Forex right now on the long term or day holding, this is one with quite a bit of potential. Let's see what else we got here. Again, these are defensive plays. The jitters in the market. Euro, New Zealand. Let me just see what's going on right now with it. Euro, New Zealand. Okay. So it ain't moving. Sure I could find it in here to give you the exact number. We'll find it in here. Yeah, it's something I wouldn't be interested in, but let's check out what the charts say. So I always like to compare the volume right now against the group, and same with the standard deviation for the volatility. But I can tell you, looking at the charts, that's pretty messy. We have some buy signals here, but they don't, I mean, there's the odd one that moves up. And again, historically, you're reaching its peak, historically. And here you go again. Uptrend, looking good. This is when you want to get in, right here. But it's hit its peak and it's coming off. So it could, again, move up, but that would help if once I get the harmonics and the candles working, it will verify the direction it expects to go. And again, it's overvalued. So it may come off and not actually move up because of that, because it's above Fibonacci historical levels. So it's another way of saying it's oversold. Obviously, I can compare that to the RSI. But here you can also see there's a lot of more negative moves versus positive moves. Overwhelmingly, it shows that there's a lot more negative moves here. So again, it's one of those things. Now, we already may have expected our big move. We had our big move, came off. Actually, there might be 2 or 3 more days historically of moves. But here's the problem. Okay, so here's our RSI. It's still at 50. There's not enough buyers in the market to push it. So that bar right there might be the peak. And again, I can check it out on the 90 or even the 30-day. So right here. So I think that's the big move historically. But when you look at the last batch, we got 3 days of some nice moves. You know, it's the approaching on the RSI, on the intraday, or sorry, on the daily, on the 30-day moves. So it's kind of approaching it. But yet it's still, the momentum's just not there. I don't think there's enough buyers. That could be the big move we would expect. I could look at, so that was, here's an interesting thing. So we have, and it's very similar in the world of crypto. So right now we have Euro against New Zealand. Now the next one is the British pound against New Zealand. So there's people piling into the New Zealand, it looks like, and I can verify that right now. Again, we have a long-term downtrend moving up, but right here it's showing coming off. It's coming off, but I personally think it depends on the market. If the market universally starts to continue to go down, I would expect this to continue to go up, only because capital needs to go somewhere for a positive momentum. And this may be another potential. See here, this is nice. It's within, again, that golden zone. So it's within that nice valuation historically. But and if the markets go down, I won't be surprised. This may be something to watch for. Again, historically, I'd say, is that evenly positive moves daily? You can clearly see we have some reaching not quite fat tails in the negative. These point beyond even 0.075. Those are extreme moves down. So we can always verify where things are going. So we have some down moves. This one looks like it really depends on the direction of the market. Here it's at 50. This seems to be like a wait and see attitude, but the momentum's still negative. So there's not enough buyers. There's more selling pressure. But here it moved up yesterday. This is a tough one because it's coming down as a bottom. I don't know, because when you look at this historically, we have a big negative move, and we do have a negative momentum for the last few days. But when you look at, again, the momentum on this one, this is the 90-day. The momentum's too negative, but the RSI is at 50. It may pop, and the entries are usually at, as I said right here, when those entries are good. I don't know why, but you know, if you start to approach 50 and 60, sometimes on the RSI, that can be a potential entry point. And then you dump it once the RSI goes above the 70 and it starts to show signs of tailing off. And here's another way to measure that on the momentum. But here in this case, the momentum's too low. But here I can kind of check out what's going on. Now, the question is this the low point? We don't know. The momentum's still low, but the RSI is going up. And these should kind of work together. What this could tell you, testing the market right here, oh, this may be a bottom, but this may be a positive upswing. And it really depends upon the RSI and the momentum here on this negative 0.05. So this is a very interesting chart where this, if the markets go down, I would not be surprised. This may be a mover tomorrow over in the next few hours. Because, you know, we're here, we check the current real time on the, right here, it's at 0. Is it waiting to pop? I don't know, but was it the British pound, the previous one? Let me just see here, GBP, New Zealand. So that's negative. So I don't know. This is probably something to watch over the next 24 hours. Anybody get questions so far? Right now, what I'm seeing in the market is definitely a form of, surprisingly from my perspective, right now, the best asset class would be definitely sugar. That's been consistently a top performer over since Thursday, but I do know that's been like that for a couple of weeks. And probably the British pound as a defensive play. The Forex is still unpredictable. There's no consistency there to say this is where we're going to see moves consistently. So you want my opinion, you want my real opinion for safety and for predictability, I'd be probably putting my money on the UK 10-year bond and the sugar, because these are been like that since Thursday. Forex is still unpredictable. To me, it still seems to be market dependent. But if I had to put money into something, these are the two I'd put in. And maybe this one as well. The XAU against the XAG. Gold against silver. And this one's been doing pretty good as well, is the German 10-year bond. That was moving, I think it was like 2% or 3% last Thursday, Friday. So it's still up there, but It's not moving today. And that might be because of the Merkel thing, where she's announcing she ain't running. So that might be spooking the German Bund. But once that settles off tomorrow or later tonight, that might start to move as well. So the CFDs are where I put my money at. Who's got questions? Anybody got comments? Okay, for Fabio, he asked me if this is part of something. Yeah, it is. Right here, we have my quant analytics dashboard. These last three ones are the ones that I've been using: the crypto, CFD, and the Forex. So Fabio asked, markets are defensive going to oil sanctions. That's a good question, but I read Bloomberg not every day, but every couple of days. The thing with oil lately, and it seems can be verified in this market here. When you look at in terms of the movers, you said WTI, correct? As a defensive play, I would say no, because you know why? It's not even in the top 10 here, I believe. Yeah, top 10. So why play it? And the reason I say that is because last week they said that the U.S. may have an oversupply. So if there's an oversupply, money's not going to go into something that ain't going to move, if that kind of news comes out. So the only top movers, and the other trend you should be aware of, not even the U.S. Treasury is a top performer. Something going on about Trump, something going on about his sanctions. People are not putting money into the U.S. right now, not a lot of cash. It's going into, as I said, UK, sugar, gold against silver, and I will probably put some cash onto the German Bund 10-year. That's probably where it'd go. I don't like what I'm seeing in the Forex markets right now. And I definitely don't like what I'm seeing in the crypto markets. I mean, I think crypto could come back. I want it to come back. But right now, I've got a system that ain't taking positions. The only one that's seeing is this WAN BTC. That's it. So where else do you go? Forex is still unpredictable, as I showed you. And CFDs is the place to be right now as a defensive play, as a safety haven. But you're asking about oil? No, because there's a lot of bad news right now coming out of the U.S. with this business of out of Texas, out of the Permian. There's potentially an oversupply. And also with Saudi Arabia using oil as a weaponizing their oil supply. So it's not encouraging the markets for the oil. Even gold, you'd expect this to be a top performer, but it ain't. But gold against silver is doing okay. So I don't know. Who's got questions? Anybody else got any questions so far? I'm going for an hour. Okay, so more from Fabio. CHR and Japanese were in play last week as XAU and USD. This week has just started. APIs. If you got a question about APIs, as I said, Fabio, these are the ones that are playing out right now. Oanda is good. I got questions about Oanda. I will tell you this. They have a market making division. And if you're using hard stop losses, meaning you signal back to Oanda, I'm just saying beware of that. This strategy I'm using does not signal back any form of stop losses. The next big thing I'll be putting up here on these pages are stop loss and take profit entries for the top performers. So that will help out, because once you signal back to Oanda, because they have a market making division, they can go against you. I'm not saying they do. They don't. That's something that you got to be aware of. I've learned the cave hats, but hotkeys would be a must. Okay, so what you're saying is you're using the hotkeys as a way to trade. Some call it discretionary, some trade it as a manual. what's the platform you're using? Are you using the FX trade? What's your platform? Are you automating? This is Python. So it's just driven off of data, not human intuition. If you're using the keyboard, that tells me it's human intuition. So, but this is interesting because the data don't lie. These are where the movers are. And the way things are lining up, yeah, these are the movers I'd be putting some cash into right now. Let me just do a refresh just to see if anything's been updated. Okay. So, yeah, nothing's been updated. Right now, it'd just be sugar and the British pound, the 10-year. True, API or hotkeys. I would use the API. API for sure because it's programmatic. And I like Python because it's pretty easy to work with. As I said, I've got courses and stuff I could show you. But this right here is from the analytics stuff. And it will expand into stop losses and entries and take profit as well. And that's all from the Fibonacci, because a lot of pros use Fibonacci as the entry points. I also like RSI, but that's right on, like Fibonacci levels can kind of be predicted and be kind of like event-based. When it hits a certain level, we're watching it and we use that to confirm the entry and even potential the exit if you're just using Fibonacci. But from what I've seen from the world of crypto, the harmonic patterns and the candles can be really, really useful to verify your entry points, as well as the automated head and shoulders. But one thing I will tell you is when you do put on positions, you got to look at very recent historical down moves. So again, if you looked at the crypto here, we got this going on, right? Negative 40 some odd % with the VEN. So we don't want to put on a position where you're going to lose half your money. So that's why I log my negative movers up here. And I use those historically as a way to ensure I don't take on a trade that has a recent history of a down move, because that's where you take on your losses. Okay, more updates. Have you back tested some models on momentum and RSI strategies with these more general brokers, market makers, or live? Okay, have I back tested it? No, I won't say I formally back tested momentum or RSI, but I will tell you I've been running this for a long time and I've tried a lot of indicators. As I said, the only ones I would use realistically is RSI. That's fairly reliable and it's predictable. And the nice thing, it does not lag like moving averages do. So RSI is something I really like. Momentum, I would not use exclusively. And the reason I don't use momentum is because of, again, downward potential movers, which you don't want to take. Also, you asked about general brokers. It's hard to say historically. I have done extensive testing with Dukascopy as well, which is an ECN. We don't have to worry about market making. I mean, you do, but it's not Dukascopy. Theoretically, it's other participants in the market. So you have the same theory that you have to work and consider are those down movers on a recent historical level. You always have to factor that in. The other thing is the market making as well, because we don't know, once we put on a position, we don't know what happens, where I can verify a when it does have a market making division that will go against you. And a lot of the times what I've been shown when I went to Oanda, the offices, because they're local to me, they have 6 guys back, and this is back maybe 5 years ago. 6 guys, their primary job is to keep all the orders within the network of Oanda. And when the big trades come in that Oanda can't keep or can't cover, they'll go to their prime broker, which I believe was Citibank at the time, and they do not want to step outside of their network of Oanda and keep it all within Oanda. So the market making guys and gals will do whatever it takes to keep it within their network. And they may, I'm not saying they do or don't, but they may do, we'll leave it in quote, questionable things. So we can't predict that. We don't know if it's happening or not. But I will say with Oanda, you got to be more aware of it. But even if you move to an ECN like Dukas Copy themselves may not do it, but it may be another market participant that does that, because I've seen these whale traders, as I shown earlier, they'll test the market and then they'll shake out the weak players and then finally make the big move to get the big pop or big spike that they're after. And again, from what I've seen, that is very predictable. The take profit on each time they test that market is very predictable. And I've seen it. With Oanda, it's too early for me to judge. And these are things, yeah, you have to worry about. But the point is, whatever strategy you use, I would plead to people, do not use stop losses that are hard stop losses, meaning that you put on your platform, if it's MetaTrader or whatever you use, and you put on a stop loss, and you say to the broker, this is my stop loss, this is my take profit, because you're signaling back to the broker saying, I'm now telling you when I'm willing to exit. And I will tell you from people that I've talked to over the years, specifically around Oanda, they will know your take profit, for instance, and then the price moves close to your take profit, and then somehow and somewhere they'll kick you out of the trade, and they'll turn around and say, oh, that's a technical problem. Sorry, we screwed you over. And that's the problem. Now, the cave hats, I'm not sure what you're referring to there. I've never heard that term. Let me just look that up. Hang on here. Cave hats, I guess that's Forex. Cover your head with a customizable Forex hat. If that's a cap. If you want to redefine that, I don't know what a cave hat is. Cave hat. Okay, let me just see here. Yeah, I've never heard of that. Do you understand why they don't have hotkeys? Again, I don't know what platform you're using. It helps. Are you using MetaTrader, using their own, the FX trade? So you learned the ropes for equities, and Bloomberg have hotkeys as well. But okay, so are you using FX trade, the platform right from Dukas Copy? It said do PC or web. So I'm going to assume it's FX trade, the Oanda broker itself, or the Oanda platform, correct? Because they will not give you hotkeys at all. They want you to screw up. They definitely want you to screw up. Why? Because you ain't going to make them money. Yeah, Java-based. When it comes to these platforms, these brokers want you to lose money. You ain't help when you win. They have to take that capital from somewhere to cover your profit. It's a big deal for the broker, Oanda in this case. So they don't want you to win, and especially if you have leverage. So they'll find ways to prematurely kick you out of a trade. So as I said, and any retail trader that trades as a human or discretionary, this is why you don't trade as a human. Because if you're not fast enough with a system that you build where you're not telling, let's say, Oanda your stop loss, you're okay. They don't know. But if you're still winning, you have a shot that they may not prematurely kick you out of a trade. Not saying they do or don't, but it happens. I've seen it. And I've got lots of people complain to me about it. So understand that. That's why I always tell people to have automated trading. When you're using the platform, FX trade through their website, let's say, or through their app, yeah, you're using what they want you to use, plus they want you to lose. That's how they screw you. I have a video on this. There's a lot of other things that I'm just here to educate you. If you go to my channel, Quant Labs, there is a video called 6 Ways a Forex Trader will, or Forex Broker will screw you. Let's see if I can pull it up here. Another MT4 Forex retail broker screwing a story of their customers. I think it was called 6 Ways. This one right here. So if you do a search, as I said, on my YouTube channel, do a search on here at 6 Ways. It's called 6 Ways Your Retail Forex Trader Broker is Screwing You. And there's all these different methodologies. And again, this was put out 2 years ago. If you read the comments, 15 years in global FX, Brian is giving you the truth. So many are suckered. Okay. So it's pretty critical that you understand that. And it's not to scare people, but you're just basically could be pissing money out a window. So, and again, you'll see in my description here, the rule of the club called 90-90-90. 90% of retail traders will lose 90% of their capital in 90 days. That's why they have the 90-90-90. And that's why it's referred to the dumb money, because they don't know what they're doing. And it's critical that people understand that. And as I always say, people can argue it, people can do whatever they want, but I will tell you, it ain't my money. So remember that. And that's why I say automation is really important, especially in your own platform, that if you are going to use stop loss and take profit, that you basically have your own system and virtually manage your own stop losses within your own system. Any broker, I would say the same for crypto as well. Binance is not so bad, but a very high percentage of the brokers or exchanges on crypto are corrupt, and a very high percentage of brokers on Forex are corrupt as well, regardless if you're doing CFD or Forex. But I think when I go live, I've been trading live a little bit, not much, but because I'm not going to put a full-on system that may not work, but I'm testing things here and there to see what happens. And it's the losses I worry about. Okay. So I just want everybody to be aware of that. Any other questions? I don't mind hanging out here for, I think we're down to 3 people or something. I almost bore people that come up. Anybody else? 8:05, my time, just over an hour. Also, if you are interested, I've got a lot of depth in this system, and there's a lot more stuff that I'm not showing. But if you are really interested in this service, I've got a sale on right now, annual, and I'm going to end it tomorrow night. And that's the price right now. And it's usually $100 a month. So you'd be looking at $1,200 for the year if you were to stick around for a full year. And if you ain't interested in that, I have a week trial as well, $37 for 7-day trial. As I said, this deal will not stay up. And it's $1,200. and I'm getting marketing consulting as well. They're saying that this system's worth right now, all the signals and the depth and reports and charts, things worth about $3,600 when you factor 3 asset classes, as well as a live interactive that I do here and other places as well. So I'll be ramping it up, and that's the way it's looking. If you have questions about that, I'm not sure. But if you ask me to put where I put my capital the next day or so, yeah, I put my capital into definitely the CFDs, as I said, with the movers of where is it? Let me just get the CFD chart up again. Yeah, it was sugar and British bonds. Yeah. Yeah, that's it. And the funny thing is, as I mentioned last week, the top mover was at 6%, was the China top 50. Look at where it's at, negative 7% tonight. And that's because of Trump. Trump is trying to screw China. And they're doing a pretty good job with him as of today, announcing that he's going to put remaining tariffs on all products. And you can see that reaction right now. You've got a market down negative 7%. And again, if you knew that was going to happen, boy, oh boy, if you shorted that, you'd be doing pretty nice now. That's a predictable trade. Yeah. And the markets are open, and that's probably going to bleed into Europe as well. You can see Australia's down, so that's a catalysmic opportunity on the other side. You'll verify what's going on in the U.S. futures. Hong Kong's down. Those are nice shorting opportunities. But China, man, negative 7%. Woo, that's a nice profit level, and that would have been predicted, you know. And because you're on this broadcast live, and you got any account, you pour your money right now, and you'd be probably guaranteed to get 7% on the short side. And as well as you can see all the other ones too. Japan, Australia, and soon to be probably the next 3 hours, you'll start to see Europe get hit too. So you got right now Hong Kong, Australia, Japan, and the China markets. 4 opportunities right there, 4 shorting in real time. Yeah, that's good, man. Shorting. So there you go. I haven't programmed the system yet to do these type of trades. I'm just watching it. I just launched this late last week. But this is another good lesson to be learned. Just from a human perspective, yeah, you could have shorted 4 of those, and you'd be doing cha-ching, cha-ching, cha-ching times 4, especially China. And you play that out until around midnight my time for another 4 hours, we're in the money. Any comments or questions? Again. So again, I do like what I see in the CFDs. Be on the upside on the UK, the sugar, and on the flip side on the shorts, got 4 opportunities right there. Predictable too, because that's what a Trump announced will definitely spook the market. And yeah, if you got the tolerance to do shorts, if you got the tolerance to even lever that up, boom. Yeah, that's a nice trade. Anybody else got any comments, concerns? 8:10. Either way, I appreciate you guys watching. Anybody else? Anybody? No? I can hang on for another minute if you guys don't have any comments or questions. Fabio, if you want to ask some technical questions, go ahead, my man. I think we've got everything covered on the trading side. If you want to do any technical, please go ahead. If you are interested in the technical, again, in the store, you want to learn about the trading Let me see if I can pull that puppy up. Let's see. Oh, no, right here. So if you come into my store and shopping cart, I've got a bunch, your models on ASICs. No, dude, this strategy is so simple. It's a Python strategy. All I'm using is what they call rate of change and RSI. That's it. That's it. It's so simple. But if you're interested, and right here, this course right here, that will get you started, get you writing an actual primitive algo system. And what I just showed you tonight also includes how to get data from, includes data how to get from Oanda, the downloading data. That's a good question. Raspberry 3, it depends on the packages I use, if it's compatible with the micro version of Python. I have not tested it, so I can't guarantee it will work because I have some strange cryptic packages, but I use all the standard, yeah, exactly, NumPy, pandas. It should be able to work. If you don't care about the reports and the email and all that stuff, it should work, but it depends on the micro Python package. So I can't say, but now you gave me an idea, man. I appreciate that. You've given me an idea. I should look at getting a raspberry or strawberry. I call it strawberry or raspberry. Sorry, strawberry. But I'm looking for a home for the strategy, and maybe I should look at that. Or $50 or $100 for a tiny computer. Everything in my strategy is 100% Python. Everything. I should start there, but for free APIs, what brokers would you use? It depends on your asset class. If you're doing Python for Forex and CFD, you have a choice of either FXCM or Oanda. Now, if you have a couple of grand, like $2,000, $3,000, I'd probably start looking at interactive brokers because you need to have that amount to get market data from interactive brokers. So that's another opportunity there. And just use a standard NumPy and pandas. I'm not Plotlet. I have some custom charts as well. I use Chart Director, $150. I think it's worth the deal. It's a steal to me. But yeah, those are the standards I'd go with. But you've given me that idea to look at the strawberry. But what I'm afraid of is running MicroPython, because that's the package you use for strawberry. But then also strawberry, here I'm calling it strawberry again, raspberry is built around Python, which you just learned today. So I don't know the limitations on compatibility of the packages that is supported on, as I said, it's called MicroPython. Because I know some of my Python packages will not run on Windows, especially the ones that generate the documents and the Office documents like Excel and Word and all that. They won't run on Windows, oddly enough, but and among other things. So I just stick it on a Linux compliant operating system, like, on a Mac or actual Linux. But yeah, I'm interested in potentially looking at other operating systems. But the other option, if you are interested, is I always would recommend using something like a virtual box to build a virtual machine, and build a Linux-based virtual machine and build all the everything in my case, the Python. And as I said, everything that I'm showing you that is generated is in Python. So it's not hard. Also, the other package I use is TALib for TALib, Python TALib for all the technical analysis. And the RSI, it works okay. Trends, it works okay. But out of all the indicators, I do like the rate of change and RSI. Yeah. So I don't know if that answers all your technical questions. No, you asked about BSD and Linux. The reason I like BSD is because it's built out of box to be secure. Linux is like you gotta customize everything to close off and what they call harden it from potential hacking and whatever else. But with BSD, specifically OpenBSD has that out of box ready to go for security in mind. But with OpenBSD, you have to understand it's a very nerdy operating system, meaning you'll be doing a lot of custom builds and compiling a lot of stuff on OpenBSD because it doesn't have a really good package manager, unlike other Linux distros like Ubuntu or Fedora or whatever else. But OpenBSD is a challenge. And if you had to choose between FreeBSD and OpenBSD, go with OpenBSD because FreeBSD, the big problem with FreeBSD is when there's patches needing to be done. The difficulty is it could take months to get a security patch implemented, as opposed to OpenBSD, it takes like a week or even a couple of days. It's really bad. The community on OpenBSD is a lot more secure. I've been that road. Yeah. OpenBSD is the better one. FreeBSD, no. I've seen a video where a guy did the test of all the different versions of BSDs. And that's what he said. I took that to heart, that the OpenBSD is the better one for the patches. The problem is with a Linux, people think it's secure. It depends on your distro, because a lot of people will keep a lot of their connectivity to the outside world or public world by default. They don't patch the security levels at all. That's why Linux can be, dare I say, insecure because of that lazy operating system administration. Whereas OpenBSD kind of closes that off by default, and it makes that hardening you don't need a process to do that. Models between machine learning and RSI and momentum. Okay, I played with a lot of quant stuff I'm going to assume for forecasting on price. Quant is hard unless you're strong in math. And can it work? I don't know. Quant funds get hit, whereas technical is more predictable on the result of price. I'm not saying quant's not useful, but why blow your brains out on the math side as well as on the complexities of the programming when I used to be a big poo-poo believer. I was so cynical against technical trading and technical analysis, but it seemed to work really well. Don't ask me why. And when I started playing with it a year ago, I struggled with it. But once you start to find the real good indicators, like the ones that I mentioned, those are really good. So there's that. So when it comes to machine learning, which I'm no expert in, I'm nowhere even, I wouldn't even classify myself as a beginner. But I will say that I think machine learning for pricing has been questioned on an industry level, even though there's a lot of hype around it. So it depends on how you apply machine learning. Now, if you told me you have a high frequency trading operation and you want to do order book and do analysis on bid and ask on high frequency trading for machine learning, without a doubt, it works. No doubt. Machine learning is good for that. Machine learning is really good for portfolio analysis as well. So it depends upon your use. If you want to use machine learning for, let's say, risk control, risk management, definitely machine learning is for that. But if you're going to use machine learning for price forecasting and forecasting on price, that is something I would probably struggle with. And a lot of people would argue with me on that. And talking to a lot of institutional folks, and also, I don't want to say who it was and whatnot, but they talk to a lot of banks. And I'll tell you this, from what I gather, the only reason there's a lot of machine learning on an institutional level is because they turn into pet projects. When you get a large customer base hearing the data science thing, machine learning thing. They want their institution that they invest in to do machine learning. So the way they get around that from an upper management level, and I'm talking about the level of in a bank, in a hedge fund or whatever, we're talking at the upper level that sign paychecks. They're the ones that's signing all the bonuses. What they'll do is they'll put together a pet project for a machine learning project. And they know a very high probability, they know that it's going to be a money loser. It's going to be a money pit. So they know that. So they keep it small. And then they can go back to their investors and say, see, we're doing machine learning. But they full well know that they're not going to make any form of capital return with these machine learning teams. But they probably know they'll make returns, as I said, on the risk management side when it comes to machine learning. And maybe if they're a high frequency trading shop, they'll make money. If they're only analyzing the bid and ask on the order book. And that's kind of like what I'm seeing. And I also based that because a year ago, I was a sponsor. My website was a sponsor as a media to a Newsweek event put on by Newsweek magazine for high frequency and institutions. Like there's Goldman Sachs was there, BlackRock was there, Dome Yard was there, Two Sigma was there. And they gave me the course outline on the high frequency level on what was being taught. And this is a very expensive course, what was being taught on the machine learning side. And Dome Yard's a startup. They're a very aggressive startup. So they're part of the curriculum. So what they want to do is to be able to impress institutional investors to Dome Yard. So what they did was Dome Yard was there to say, here's what we're doing, here's the results. So they were pretty open about what they learned on the machine learning when it comes to high frequency trading. And I think Sigma 2 was also putting on a course as well. And all they focused on was just what I just described. The only things on the machine learning side that they were showing was either on a portfolio for risk management or for portfolio optimization or order book analysis for bid and ask on a high frequency trading level. That was it. And that's all I saw. Now that was a year ago. I don't know where it's at now, but talking to another big player only a month, 2 months ago, they came back and said the same thing. As I said, on the upper management, this is the attitude of these institutions. So they'll put together a pet project to make their clients happy and say, yeah, we're doing machine learning. But they know full well that that may be a big, I won't say a big, but a capital loss. That's the attitude as far as I can tell. So you may have heard it from me, but that seems to be the approach when it comes to the big institutions. I could be wrong, but you know, these are pet projects for certain senior quant guys, let's say, or certain senior that want to put together their own little project, and they have the approval to do it. But is it universal right now? I don't know. But machine learning is definitely very useful, but it depends on the application of it. I hope that answers your question. Anything else you got? Yeah, I've talked about the RSI momentum strategies. RSI I like. Momentum, I don't know. But machine learning, I'm definitely going to want to get into it early next year once I can stabilize the crypto stuff. And it seems to be, and it was working really nice. And then, as I said with the volumes and the P&L, when you look at for the last, I don't know how many positions, there's no moves. It's the same currency or same crypto pair. There's no money to be made here right now. And I do think that crypto will come back with a vengeance. I don't know when, but it's going to go mainstream. The volumes are down, the volatility is down. And if I look at my watch list and compare all the different see here, we got quite a few on the watch list for Forex. And you only have the same one I was telling you about, the WAN Ethereum. That's the only one right now that's worth trading. And if I look at the crypto, it looks like the CFD dropped off. Bugs. Got to fix that. But I could probably fix that right now. Just give me a second here. This is how my system works. See if it relaunches my table. Yeah, something going on with the watch list for my CFDs, but I'll be able to fix it later tonight. But there's a lot of negative movers on the watch list for CFD. But yeah, I mean, crypto right now is just, I don't know. I mean, when you look at the big movers, they're kind of moving, but they're not big. If you asked me a month ago on what's going on with Ethereum, these big movers, Ethereum, Bitcoin, Litecoin, Ethereum, and that was Ethereum Classic, and Bitcoin Cash, these, a lot of them would hit a 1% move, and you're not even getting 0.21%. How do you trade that? That's hard. I mean, I'm sure you could maybe make some trades, but if I had only $100 to trade for the day, I'd rather put my money into, right from what I'm seeing right now, CFDs. And it's a predictable trade. That's my view. But I'm waiting it out for crypto to come back. Crypto can be really nice. I was able to over 3 days, get a 40% collective cumulative return on a bunch of positions, like 40 freaking percent. It was amazing. But that was like 3 weeks ago. I can give you the exact date. You're interested. See right here, these movers right here, but it's kind of tailed off. But so we're going back to, yeah, October 16th and the weekend before that. There are some nice movers there. And you don't get movers like that. But on the CFD side, on the short, you can make right now on the Chinese top 50, 7% on the short side. That's not bad. So any other questions before I sign off until next week? And I'll be in person. I don't know if you live in Toronto, Canada. Anybody? Questions? I'll hang out. It's almost 8:30. Let's give it till 8:30. I guess there's a few hardcore of you guys. I don't know if you're the same crowd since day one or when I started. 8:29. Please type something up or a comment if you got anything to type up. But this is a nice, I'm pretty happy with what I've put together here. And this CFD right now, thanks. The CFD is really, really powerful. You do not hear about this stuff on Bloomberg, which I follow, as I said, every couple of days. I'm going to try to get back into it every day because it's really, really powerful stuff. I never felt totally safe to trade on crypto. Have you traded a CFD? Yeah, I've traded a couple of CFDs. But again, to be truthful, right now, the CFDs that I looked at today, if I was to put money again on it, without a doubt, I'd be putting on the top ones that I'm seeing on the long side. And now what I just saw on the short, I'll put it this way, that I'm scared of shorting. And I only like the long only right now until I get the system working consistently, specifically in the Forex and the CFD. So I'm not 100% confident in the shorting yet. But when you see things like this, you never think, oh yeah, Trump negative against China, and you seeing it, it is negative with a negative 7% on their top 50. That's like a gimme. So once I can see those relationships like this, more and more of them, believe me, I'll definitely get into shorting because this is better than crypto. And I thought crypto was the was the knees bees, but it depends on the market overall. You asked him, have you traded CFD? Yes. The volatility, LOL can hedge big. You can hedge big, but everyone says, well, you can hedge with oil, you can hedge with gold, but look at how gold is performing. It's not performing. The traditional ways of trading with traditional hedging, if you were to involve classic gold, yeah, but it's not there. It's such an unpredictable market. Big move in, he's typing. So if you're saying to hedge in with gold to neutralize, I think hedging is tough to do, especially if you're not getting the performance of gold. If you're looking at the ratio of gold against silver, yeah, potentially. But why not just long only or short only on a particular one? The learning curve is good. Yeah, I'll tell you something, Fabio. If you want to learn anything, whether crypto or Forex or whatever, to me it's all the same. But what you're looking for are trends in the market, and then you're looking for patterns. And what I learned from all that is looking at logs. And I dug into the logs, and I was able to pick up all those trends. A month ago, the regime in crypto was so good and was predictable, and I was able to catch the tail end of that. But again, the market regime, and I just showed you crypto how it's not as a strong opportunity as it used to be. And now that's why I've diversified in adding in the CFD and Forex. Now we went through the Forex. To me, that's pretty unpredictable, but there may be some potential. But why trade something that's unpredictable when you can go after something that's more predictable? Looking at USD China, I can pull that up. Let me just see how those are doing. Oh, we got to go into the Forex right here. CNH. See, right now it's not moving. It's at zero. So the question to me is why trade it? I want to put money in the traders. And those are the ones that I've already hinted at. The 7% on the downside for the shorting. On the Chinese top 30 or 50 as an index, yes, the short side. But for me, I want to see movements. And I will tell you right now on the CFD side, the predictable one, as I said, the two that are fairly predictable to me is the UK bond and sugar. Those have been predictable since Thursday. And that's where I put my money. That's 3 opportunities there, right there. And the Chinese 50 here, 6 month long. It depends on your time horizon on your positions. I like intraday models on position building systems. Yeah, you can definitely do that. I haven't shown you this, but my system's pretty capable of putting on half positions, more positions, and ramping up, as you saw in some of the charts with those up moves, with those nice green bars over a 2-3 day move. You can do that and add on the additional charts, like, as I said, candles, harmonics, this thing called automated head and shoulder. They line up. It just adds conviction to pour on additional positions, scale it up, either not just on more positions, but also leverage as well. If your conviction's pretty strong. But I would even lever up this UK 10-year bond and the sugar, because it's been consistent since Thursday. It's been consistently up. That to me is a given. I mean, it's not as strong as it was on Thursday, Friday, but the UK 10-year bond has been pretty strong as a performer. And this one here as well, the Deutsche, the German 10-year bond, has been up there too. It's not moving right now. And this one has been moving as well. The gold against the silver has been moving since Thursday. Those are, to me, convincing that tomorrow, if the markets are back, they'll still be moving up. And those are where I put my capital. Don't want to put my capital where it's unpredictable as I showed you in guessing in Forex and looking at the crypto, as you said, you're scared of it. That's fine. But man, when it moves and it moves nice. But right now it ain't moving. It ain't moving the way you want it. And the volumes are very, very small. There's no volatility. And I don't know. I haven't done a historical analysis of the volumes of the last month. But it's definitely lower, much, much lower. And that's what I've been reading on a lot of the websites. They've been saying Bitcoin's, the volume's down, and who knows? But the price has stayed stable. I mean, it loses a little bit, comes back. But again, from a capital deployment level, I want to put money where things move. And as I said, right now, I'm only focusing on long only. But these two that you're looking at, the 10-year UK bond, the sugar, as I said, Thursday, it's been consistently up. That's where I put my money on these CFDs. That's just me. And I probably put a little bit into the gold and silver index as well, and maybe a little bit into the Deutsche. And probably as the markets start to go further down, because it's nothing but downward pressure. I'm not sure if that means anything, or anybody else? No, it's just me and you. Anybody else got any questions or concerns at all? I got 8:37. Let's give it 8:39 my time. If you got any other questions, so we can wrap her up. But we talked about the technical. We've talked about the trading right now, where it stands. I may do. You may want to check out my Facebook if you're serious. To get the alerts, just subscribe, obviously, on the channel here and the Facebook. So lost those. Okay, keep going. Yeah, so I'm going to do a Facebook thing once this goes live. So those was looking at WTI. As I said, here, let me just show you. So let me pull up. Looks like my window here has frozen up. Okay, so let me see if I can change this. Okay, well, I guess not. Okay, so as I said, you mentioned WTI. WTI, if it ain't in the top, even if it's not in the top 5, I wouldn't even touch it. There's no performance on it. It's WTI right here. It's roughly 15th. I wouldn't even put, actually, it's losing money. And as I said earlier, fundamentals say there's an oversupply. It's not a good move, any move, because there's an oversupply on in the US. And now Saudi Arabia could turn around and weaponize oil price as well. Monthly, maybe, but what's your time horizon and what's your expected return? Do you have a view of, you ask me if I'm touching oil. I wouldn't touch it. It's not moving. Yeah, like I said, the only view I have is as I showed you. 10-year bond, UK, and I put definitely sugar. Sugar's a good one. And a little bit on the gold against silver, and maybe a tiny bit on Deutsche, the German 10-year bond. These 4 right here. I think, as I said, the 10-year bond's getting hit because of the Merkel news today. That would get a little bit of performance. Last Thursday, Friday, it was around 1%, but it's still up there. I mean, what's the move? So it's at 0.43. Yeah, but these guys right here, these top 3, that's where I put it. I'm not sure if you ask me if I have a view of what. Yeah, but that's my view. Right now, that's it. I wouldn't put it's not a risk on market, that's for sure. I put a little bit of capital to get some form of return. on those top two. That's the only place it's. I mean, we did talk about Forex, but what you're seeing right here, the currencies are predictable. The rand and the lira are predictable, but there's different combination pairs. Because last week it was US against the lira was doing good, and the euro against the lira was doing good, the Turkish lira. But again, it's unpredictable. And earlier today it was the franc against the so which one do you pick? Yeah, hopefully, yeah, if you learned a lot, that's good to know. That's part of why we do this. But as I always say, the data don't lie. But from a capital deployment and performance, that's where I put my money. I mean, that's what it says. Try almost fall into exotics too. Yeah, I can't say anything about a lot of the exotics. I'd like to do it, but it's so unpredictable. I trade some Euro USD, but as you said, daily returns. Yeah. There's no, I mean, look, here's the volume. Where's the euro US dollar? I don't think it even registers. There's no volume on that pair. The US, time and risk adjusted returns, Euro US doesn't fall into it. No, there's, as I said, there's virtually no volume here on that pair. And usually that's the traditional big boy out of this lot, but it's the indices. Oh, I'm sorry. I'm looking at the wrong one. So we are looking for euro. Yeah, it's not even in the, it's the exotics in Norway, Sweden, the rand. Those are the ones moving based on volume. So I don't know what to tell you. Doesn't fall into that. I was overwhelmed when you showed the one and didn't saw on it the volume one. Yeah, that's right. Let me go back to the CFD. So the CFD, I think it's on here. There's natural gas, so you could put some money into natural gas. But again, from a, where's the WTI? There's no, it's not in one of the top. No. I mean, you got gold, the ratio of the gold against silver, though that's the performer, but there's no oil. And the reason is the bad. Oh, I'm sorry. Here's the West, the WTI. It's low still. It's not big. Yeah, it's not a top performer. I'm after top performers. See, the thing is with media and what you're taught is you go after the major players, but from my perspective, why? It's not a top performer. I'd be putting my money into where the money should go, And the top performers, and you mine it, you net out your spread. Meanwhile, you put money into an asset like oil, WTI or Brent, and it's not moving. Actually, it's losing. So it doesn't make sense, at least from my perspective. Anything else I can help you out with? I'm just waiting for you if you want to type up anything. Yeah. Okay. So I got 8:45. You got it. Everything answered for you? Maybe, who knows? I should use Python to reason daily volume map. Yeah, this is called a tree map view. This helps. Doesn't mean a lot, but these are usually your top indicators that you can kind of use to verify. This rank is the important one. So I got momentum in there. I've got some stat stuff, volatility, momentum, trend. This one I'm not using is the R value and P value. Those are useful. Very simple stuff. I mean, I've tried all the weird, the CCI and all kinds of weird indicators. And a lot of them are just lagging. I don't see the point of it. RSI is good. Rate of change is very good. That's probably, those two are the best ones. Even moving averages. I mean, it's good to confirm a theory in terms of as an entry, but you can also use Fibonacci as well. And that's what I put a lot more emphasis on for the entry and exit. But that's just one level. But then when you add in your candlestick and your harmonic, you start to see things line up. And usually from what I'm seeing, especially when it comes to a Marubozu candle, that's a really good indicator for an entry. Yeah, and there's only 6 candles I look for, but Marubozu is one of them. But I got a whole section on candlesticks if you look up on my channel, on my YouTube channel. Anything else? I got 847. Anybody else? I'll wait it out. 849, 850. So that's when I got 847. Nobody types up anything before 850. We'll terminate for tonight. All right. Yeah, I do these live. That's why I'm saying to get on the Facebook, because I'm experimenting again with Facebook on these lives with Facebook and YouTube. But there is a schedule Monday nights, 7 p.m. my time, because I'm Eastern Standard. So that's what I expect to do. I will be doing more of these for my audience through zoom.us, but it won't be for public consumption. So we got 848. Any other questions, comments? It's just sampling of what I'm looking for. But again, I have not seen anybody talk about the British pound, the British bond as a top performer, nor sugar. It's like a secret. They don't want you to know these things, but I can verify sugar's been doing really well in the markets. Nobody talks about it. But as you said, that's where I put my money. And if I was the risky kind, that right there, there's 4 of them as we highlighted that you'd be making cha-ching, cha-ching, cha-ching right now out of Asia and Australia for shorting. I mean, that's a big loss right there, -7%. Correlation. Well, correlation, I think, is right in front of us. If Trump says he's going to put the balance on tariffs on the balance of what's coming in from China and the U.S., obviously it's going to be a correlated back to China the following night. How do I trade correlations among the daily movers? That's hard to say. A lot of the relationships that you find are come and go. Sympathy moves in the FF. Yeah, that's right. U.S. dollar for a while was tied to the moves of the U.S. Treasury. But those are hard to find. I mean, they just don't come to you. Like you're comparing, in this case, 33 entries. So that's 33 assets against the number of available Forex pairs of 64. So you have 30 times 64 exponentially, those combined pairs looking for those relationships. And they come and go. There's no predictability in that. But on a political front or a sentiment, as I said about the CFDs, those are definitely correlated. I mean, that's 4 opportunities right there if you were to short those indices for Asia, Australia, Hong Kong, probably Singapore if you have access, and China, right? And they're down. They're down serious. That's pretty well clear because of Trump, the Trump news. Huge impact. mean, that's the, but look, I mean, these are big movers. Japan, China, Twix. I'm not sure on that one. Hong Kong's down. It's like, baboom. It's times 3 and Australia on top. It's like 4 opportunities there right now. Get 3 and 7% moves down to short. That's a gimme, and that could last through the night. Who would have thought, eh? So anybody else got any questions? 8:51. But thanks, Fabio. Lots of good questions. I really appreciate it. There's always somebody on these streams that have lots of questions. And you were the rock star for tonight. I appreciate it. Hopefully I've answered a lot of your questions. So we got 8:51. Let's give it to 8:53. See if anybody else got any questions, or yourself again, Fabio, for anything else you may have. The data here does not lie. I call 63.33 on WTI in the morning. Well, let's see the price. Again, I don't know if in the last hour, let me just see, I do have the latest hourly price, 63. Market is going down this week. Yeah, it's been forecasted for a long time to go down. We know that. Let me see. So was that WTI or Brent that you? Okay, so it's WTI. Let me just see. So WTI. So you, man, WTI. Oh man, this is all new. Let me see what I can find for the WTI. Okay, so the price was, it's my close on the WTI. So you said 63. So it's at 67, roughly. So it has dropped. And was that a long that you put on? Oil moves the world. There's always the elephant in the room. I don't know about oil. If I'm going to be honest. I think it's really the treasury, the bonds. Right now, that's what's moving the markets is the bond, and I think the bonds are moving the market because of debt, of the U.S. debt. That's scaring people, and nothing to do with oil. And that's why I think we're having this huge sell-off is because of that, and that's a concern. Yeah, and that's the other thing is the rate hikes going up as well. That's what's moving the market. Really, the big one is the trade war. That's what's moving the market. But I find it quite odd when you look at the top performers that are moving as a defensive play. You would expect the U.S. Treasury to be right up there, and it ain't. And it's as I said, it's sugar in UK or Germany or gold against silver. Those are your top big boy movers. So that tells me, why isn't the U.S. Treasury moving? It says something about the U.S. and people are scared of the U.S. and you get a little bit of movement on the Treasury, but you get the big move on the U.K. Like, why are they choosing the U.K.? You would also see the German Bund as well up there as well. Last week it was up 2%. The top 3 was sugar, China top 50 index, and then Germany. Were the top 3, but not the U.S. Not in U.S. So it seems to be people are scared of the debt levels of the U.S. and the trade war. So moving out of the U.S. That's how I'm looking at it. 8:55. You want to take it up to 9 o'clock? Anybody got a question or a concern? But traditionally with oil, it used to be the big ones was oil and gold. When there was expansion movement, it'd be oil that was the big mover. If it was safety play, it'd be gold. But we're not seeing that. It's definitely the U.S. debt levels, I think, spooking the markets and the trade war. Those are the top two concerns I would imagine, because they said that once the U.S. Treasury was going over 3%, or approaching 3%, it broke through. That was a concern because now as they buy up U.S. debt, they're asking for a premium because it's looked upon as more risky now. So off they put it into UK. And the odd one, again, is like, why sugar? Why sugar? Not oil, but sugar is the big one. And as I said, the reason I believe that oil isn't up here in these top performers is because of oversupply and the problem with Saudi Arabia with that journalist that they decided to knock off. That's the way I look at it. I'm looking at USD China moving again at the open in 5 minutes. Let me check that out. I do know I'm supposed to have CNH here. I don't know why it's not coming up. USD. Let's see. You know what the other one that surprised me was India. Oh, here we go. But again, it's not moving. It's not. I mean, I don't know what you call it, but it's 0%. It's just something I'm not really interested in. You know, from a commodity point of view or derivative, yeah, I'd be putting my money into the CFDs. Anybody else? At 8:57. I think we'll wrap it up at 9 o'clock. Anybody? I got 8:58. Type away, type away. There you go. No, there's 4 of us, Fabio. So everyone's been quiet. It's just you're the only one talking or typing. So we got 8:58 still. Probably not. Yeah, they're just tire kickers. Yeah, they don't trade. That's right. They don't take it seriously. See you, man. Yeah. So if you got any other questions, let me know. I'll stay on for another minute. I got 8:59 here. If not, oh, thank you, man. You enjoyed the content. Appreciate it. You have some really good questions, man. Yeah, I got another minute. I know there's about a minute delay out of synchronization, but I got 8:59. Yeah. Okay, we got another minute. Okay, I think we're almost done. If anybody else, last minute. 8:59. Okay, see you soon, Fabio. Thanks for coming out on YouTube. Right, 9 o'clock. Okay, so we'll do a night all, and we shall end it tonight. Thanks for coming out, guys, especially you, Fabio. Appreciate all the stuff. It was pretty cool. Enjoyed it. Talk to you later. Have a good night.